Based on the historical data and forecast, Bitcoin shows a strong uptrend. The price has consistently broken through resistance levels, with the recent high reaching $119,800. The RSI has been fluctuating but generally trending upwards, indicating increasing bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and a potential for further price movement. Considering the RSI is currently around 67.3, it's not in the overbought territory, above 80, yet, allowing for further upward potential. The forecast for the next week predicts prices hovering around $117,900 to $119,100, reinforcing the bullish outlook. Therefore, I recommend a long position, aiming to capitalize on the continued upward trend. My strategy involves a tiered entry approach. Initially, enter a long position at $117,900, with a stop loss placed at $116,000, just below the established support level. The first target price is $118,600, aligning with the first forecast price. If the price reaches $118,600, consider moving the stop loss to the entry price of $117,900 to secure profits. The second target price is $119,100, based on the forecast. If the price reaches $119,100, consider taking partial profits and tightening the stop loss to $118,500. This approach balances risk and reward, allowing us to benefit from the predicted upward trend while protecting against potential downturns. Based on the historical data and forecast, Ethereum exhibits a clear upward trend. The price has consistently broken through resistance levels, and the forecast indicates continued appreciation. The RSI values have generally been trending upwards, with recent readings above 70 suggesting overbought conditions, but the strong upward momentum justifies a bullish strategy. Considering the Bollinger Bands, the price is currently near the upper band, indicating a potential short-term pullback, but the overall trend remains positive. Therefore, I recommend a long position with an entry price of $3,100, placing a stop-loss order at $3,010 to mitigate potential downside risk. The initial target price should be $3,270, aligning with the forecast for July 16, 2025. To maximize potential returns and manage risk effectively, I suggest a tiered target strategy. After reaching the first target of $3,270, consider moving the stop loss to the entry price of $3,100, effectively creating a risk-free trade. If the price continues to rise, set a second target at $3,390, coinciding with the forecast for July 22, 2025. This approach allows us to capitalize on the upward trend while protecting profits and limiting potential losses. This portfolio combines the RSI, Bollinger Bands, and forecast data to create a robust and adaptive investment strategy. Based on the historical data and forecast, XRP shows a clear upward trend. The price has consistently moved above the support price of $2.54 and approached the resistance level of $2.95. The RSI indicates that XRP has been in overbought territory for the past few days, with values consistently above 70. However, the forecast data predicts continued price increases, suggesting a potential pullback to around $2.89 on July 16, 2025, followed by a steady climb. Considering the RSI and Bollinger Bands, I recommend a combined strategy. Initially, we will enter a long position at $2.89, placing a stop-loss order at $2.80 to protect against a sudden downturn. The initial target price will be $3.12, coinciding with the forecast price on July 20, 2025. As the price approaches $3.12, we will reevaluate the situation. If the price continues to rise, we will move the stop-loss to break even at $2.89. We can then set a more ambitious target price of $3.22, aligning with the forecast for July 22, 2025. This combined strategy leverages both the forecast data and technical indicators, providing a balanced approach to maximize potential returns while managing risk. This strategy aims to capitalize on the prevailing upward trend while incorporating risk mitigation techniques to protect capital. Based on the historical data and forecast, BNB shows a clear uptrend with consistent price increases over the past 2 weeks. The RSI values have been fluctuating, but generally trending upwards, indicating strengthening momentum. The Bollinger Bands are widening, suggesting increasing volatility and potential for further price movement. Considering the support price of $669 and the forecast for continued upward movement, I propose a long position strategy. We will enter a long position at $695, placing a stop-loss order at $689 to mitigate potential losses if the price reverses. The initial target price will be $705, aiming to capture a significant portion of the forecasted upward movement. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider entering a long position at the prevailing price, with a stop-loss at $685 and a target price of $703. Conversely, if the price touches the lower Bollinger Band, it signals a potential buying opportunity. We will enter a long position at $695, with a stop-loss at $685 and a target price of $705. This combined approach leverages multiple technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana shows an overall upward trend, supported by the recent price increase and the forecasted prices remaining above the $160 mark. The RSI has been fluctuating between 48 and 63, indicating neither extreme overbought nor oversold conditions recently. However, considering the forecast and the upward trend, I propose a long position strategy. We will enter a long position at $162, coinciding with the forecast price for July 16, 2025. The stop-loss will be set at $159, just below the recent price action and the lower Bollinger Band, to protect against potential downside risks. The initial target price will be $166, aligning with the forecast for July 22, 2025, representing a reasonable profit target. To refine this strategy, we will incorporate the Bollinger Bands and RSI. If the price touches the lower band, we will consider a buy-in at the bottom of the Bollinger Bands, around $139, with a stop-loss at $135 and a target price of $154. If the RSI reaches 80, we will consider a short position at $166, with a stop-loss at $168 and a target price of $162. Combining these three strategies, the most efficient portfolio will prioritize the long position at $162, with a stop-loss at $159 and a target price of $166, as the overall trend is upward and supported by the forecast. Based on the historical data and forecast, Dogecoin shows a generally upward trend with recent volatility. The RSI values have fluctuated between 43.8 and 66.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened recently, suggesting increased market volatility. Given the forecast prices are trending upwards, and the current RSI is approaching the overbought territory, a cautious yet bullish strategy is warranted. I propose a strategy combining RSI and Bollinger Bands, with a focus on potential pullbacks to initiate long positions. The entry price for a long position will be $0.197, triggered when the price touches the support level of $0.195 and the RSI dips below 40. The stop-loss will be set at $0.188, slightly below the support level, to limit potential losses. The initial target price will be $0.203, aligning with the forecast price and the upper Bollinger Band. If the price reaches $0.203, we will move the stop-loss to break even to protect profits. A secondary target price of $0.21 can be considered if the upward momentum continues, but this will be assessed dynamically based on further price action and indicator readings. This strategy aims for a high-risk, high-reward profile, capitalizing on the upward trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, TRON shows a slight upward trend, consolidating between the support of $0.293 and the resistance of $0.303. The RSI indicates that the asset is approaching overbought territory, currently at 70.0, suggesting a potential pullback. The Bollinger Bands show that the price is near the upper band, reinforcing the possibility of a short-term correction. Therefore, I propose a short-term contrarian strategy, aiming to capitalize on a potential price dip. We will enter a short position at $0.3, placing a stop-loss slightly above the upper Bollinger Band at $0.308 to protect against a false breakout. Our target price will be set at the support level of $0.293, aiming for a profit of $0.007 per TRON. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will cover the short position and consider a long position. However, given the current RSI near 70.0, the short strategy remains the most promising for the immediate future. This strategy combines technical indicators and price action analysis to maximize potential returns while minimizing risk. The short position at $0.3, with a stop-loss at $0.308 and a target price at $0.293, provides a defined risk-reward ratio and aligns with the observed market conditions. Based on the historical data and forecast, Cardano shows a clear upward trend, especially considering the recent price surge and the forecast indicating further gains. The RSI consistently climbed above 50, reaching levels above 70, suggesting strong positive momentum. The Bollinger Bands also confirm this, with the price consistently above the middle band and approaching the upper band. Given this bullish outlook, I recommend a long position strategy. We will enter a long position at $0.728, placing a stop-loss order at $0.744, just below the support level, to protect against unexpected downturns. Our initial target price will be $0.788, aligning with the forecast price for July 22, 2025. To refine this strategy, we'll incorporate RSI levels. If the RSI falls below 30, indicating an oversold condition, we will consider entering a long position at that level. Conversely, if the RSI reaches 80 or above, signaling an overbought condition, we will consider taking profits or tightening our stop-loss. The portfolio will prioritize the upward trend and forecast, with the RSI and Bollinger Bands serving as secondary confirmation and risk management tools. This approach aims to capitalize on the prevailing bullish momentum while mitigating potential losses through strategic stop-loss placement and dynamic adjustments based on RSI signals. Based on the historical data and forecast, Sui shows a strong upward trend. The price has consistently been making higher highs and higher lows, and the recent price action suggests continued momentum. The RSI values have been generally increasing, indicating strengthening bullish sentiment, with recent values above 60 suggesting overbought conditions but not necessarily a reversal. The Bollinger Bands have been widening, indicating increased volatility and a potential for further price movement. Given the forecast prices, which predict a steady increase from $3.78 to $4.42, I recommend a long position strategy. My recommended strategy is to enter a long position at $3.78. The stop-loss should be set slightly below the bottom of the Bollinger Band on July 15, 2025, which was $2.27, to mitigate potential losses. The initial target price should be set at the resistance level of $4.31. If the price breaks through this resistance, a second target price can be set at $4.42, based on the forecast price for July 22, 2025. This strategy combines trend analysis, RSI signals, and Bollinger Band support to maximize potential returns while managing risk effectively. The strategy aims to capitalize on the predicted upward trend of Sui. Based on the historical data and forecast, Stellar shows a clear upward trend, supported by the consistently rising forecast prices and the recent break above the resistance level of $0.48. The RSI indicates periods of overbought conditions, particularly in the last week, but the overall trend remains bullish. Considering the RSI and Bollinger Bands, I recommend a long position strategy. We will enter a long position at $0.42, utilizing the forecast price as our entry point. A stop-loss order will be placed at $0.393, just below the recent swing low, to limit potential losses. The initial target price will be set at $0.501, aligning with the first forecast price and providing a reasonable profit margin. To further refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the upper band, we will consider taking partial profits at $0.509. If the price falls towards the lower band, we will reevaluate the trend and adjust the stop loss accordingly. This dynamic approach, combining RSI and Bollinger Bands, should maximize returns while managing risk effectively. The portfolio will be 60% long position, 30% partial profit taking, and 10% stop loss management. Based on the historical data and forecast, Ethena shows a clear uptrend, particularly evident in the recent price action and the projected forecast prices. The RSI consistently trending above 40 indicates strengthening momentum, with values nearing overbought territory, above 80, on multiple days. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering these factors, I propose a long-term investment strategy focused on capitalizing on the prevailing bullish trend. Specifically, I recommend entering a long position at $0.338, setting a stop loss at $0.318, just below the established support level, to mitigate potential losses. A reasonable target price would be $0.368, aligning with the resistance level, offering a potential profit of $30 per Ethena. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. When the RSI dips below 20, oversold, it signals a potential buying opportunity. Conversely, when the RSI exceeds 80, overbought, it suggests considering selling or reducing exposure. Regarding the Bollinger Bands, prices touching the lower band indicate a potential buying opportunity, while touching the upper band suggests a selling opportunity. Combining these signals, I propose a portfolio strategy where we initiate a long position at $0.338, set a stop loss at $0.318, and target $0.368. This strategy blends trend following with momentum and volatility indicators, optimizing for high returns while managing risk. Based on the historical data and forecast, Arbitrum shows a clear upward trend. The price has been consistently moving above the Bollinger Band center, indicating bullish momentum. The RSI values have generally been above 50, further supporting this trend, although it has approached overbought territory recently. The forecast for the next week predicts continued price increases, with values ranging from $0.407 to $0.437. Given these factors, I propose a long-term investment strategy focused on capitalizing on this upward momentum. My strategy involves entering a long position at $0.407 on July 16, 2025. The stop loss will be set at $0.376, coinciding with the support price, to limit potential losses. The initial target price is $0.437, aligning with the forecast high for the week. If the price reaches this target, we will reassess the situation. Considering the overall bullish trend and the potential for further gains, we can set a secondary target price at $0.463, the resistance price, to maximize profits. This strategy leverages the upward trend, support and resistance levels, and forecast data to achieve high returns while managing risk effectively. Based on the historical data and forecast, ZKsync shows a recent upward trend with price fluctuations. The RSI values have generally been increasing, indicating strengthening momentum, and have recently crossed above 50, suggesting a bullish outlook. The price is currently near the support level of $0.054, and the forecast predicts a continued rise, with prices reaching $0.0582. Considering these factors, I recommend a long position with an entry price of $0.0549. We'll set a stop loss at $0.053, just below the support level, to limit potential losses. The initial target price will be $0.06, aiming for a reasonable profit. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, which aligns with our entry point. The forecast suggests the price will likely remain within the upper band, confirming the upward trend. Therefore, if the price reaches $0.0567, we'll move the stop loss to $0.055 to secure profits and reduce risk. If the price continues to rise and breaks above the resistance level of $0.0613, we will adjust the target price to $0.063, capitalizing on the momentum. This combined strategy leverages RSI, Bollinger Bands, and support/resistance levels for optimized returns. Based on the historical data and forecast, EIGEN Cloud, Prev Eigenlayer, demonstrates a clear upward trend, supported by the consistently rising forecast prices and the breach of the 1.31 support level. The RSI indicates that the asset is currently approaching overbought conditions, with readings above 60, but hasn't yet reached the 80 threshold. The Bollinger Bands show that the price has recently moved above the upper band, suggesting bullish momentum. Therefore, my strategy is to implement a long position, entering at $1.36. To mitigate risk, a stop loss should be set just below the recent support level at $1.31. The initial target price will be $1.43, aligning with the recent high. To refine this strategy, I will incorporate the RSI and Bollinger Bands. If the RSI falls below 45, indicating an oversold condition, I will consider adding to the position at $1.34, with a stop loss adjusted to $1.31. If the price touches the lower Bollinger Band, a buy signal is generated, entering at $1.34 with a stop loss at $1.31. The target price will remain at $1.43. This blended approach combines the momentum of the upward trend with the technical signals of RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Injective shows a clear upward trend, with prices consistently rising over the past 2 weeks and a forecast projecting continued growth. The RSI values have been fluctuating, but recently climbed above 50, indicating strengthening momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI dips below 45 and the price touches the lower band of the Bollinger Bands. Specifically, we will enter at $9.82+. The stop loss will be set just below the lower Bollinger Band at $9.5+, providing a buffer against short-term fluctuations. Our target price will be $13.3+, aligning with the latest forecast and allowing for a substantial profit. To optimize our portfolio, we'll incorporate a dynamic adjustment based on the RSI. If the RSI reaches 80, we will partially take profits by selling 50% of our position at $13.3+, securing gains while leaving the remaining 50% to potentially capture further upside. Conversely, if the RSI falls below 20, we will exit the entire position at $9.5+ to mitigate losses. This hybrid strategy combines the momentum signals from the RSI with the volatility indicators of the Bollinger Bands, creating a robust and adaptive approach to maximize returns while managing risk effectively. Based on the historical data and forecast, Ether.fi shows a clear upward trend. The price has been fluctuating but generally increasing, supported by a recent surge to $1.23. The RSI values have been oscillating around the 50 mark, indicating neither extreme overbought nor oversold conditions, but trending upwards. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering the forecast, the price is expected to continue its upward trajectory, reaching $1.23. Therefore, I recommend a long position strategy with an entry price of $1.15, a stop loss price of $1.12, and a target price of $1.23. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 40, consider a long entry. When the RSI reaches above 70, consider taking profit. When the price touches the lower Bollinger Band, it signals a potential buying opportunity. When the price touches the upper Bollinger Band, it signals a potential selling opportunity. Combining these signals, I suggest entering a long position at $1.15, placing a stop loss at $1.12, and setting a target price at $1.23. This strategy leverages both the upward trend and the volatility indicated by the Bollinger Bands, while using the RSI to confirm potential entry and exit points. Based on the historical data and forecast, Arweave exhibits a strong uptrend. The price has consistently moved upwards, breaking through resistance levels and showing a positive forecast for the next week. The RSI consistently rises, indicating increasing momentum, and the price is currently above the Bollinger Bands, further confirming the bullish trend. My strategy will be a combination of RSI and Bollinger Band signals, with a focus on capitalizing on the predicted upward movement. I will prioritize long positions to leverage the anticipated price increase. My investment strategy involves a tiered approach. First, I will enter a long position at $6.9, anticipating further upward movement based on the forecast. The stop loss will be set at $6.5, protecting against a potential pullback. The initial target price is $7.31, aligning with the forecast for July 16, 2025. If the price surpasses $7.31, I will adjust the target price to $7.78, taking advantage of the continued bullish momentum. Finally, if the price reaches $7.78, I will move the target price to $8.06, capitalizing on the forecast for July 22, 2025. This strategy combines technical indicators and forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Bonk demonstrates a clear upward trend. The recent RSI values consistently hover above 50, indicating positive momentum. The forecast prices also predict a continued increase, reaching $0.0000344. Given the current trend and forecast, I recommend a long position. We will use a combination of RSI and Bollinger Band strategies. The entry price will be set at $0.0000276, coinciding with the first forecast price. The stop loss will be placed just below the support level at $0.0000298 to protect against unexpected downturns. The initial target price will be $0.0000310, aligning with the forecast for July 18, 2025. To optimize returns, we will implement a dynamic target price strategy based on the Bollinger Bands. If the price reaches the upper band, which is predicted to be $3.05 on July 15, 2025, we will consider taking partial profits and adjusting the stop loss to break even. The final target price will be $0.0000344, corresponding to the last forecast price. This combined strategy leverages both the momentum indicated by the RSI and the volatility implied by the Bollinger Bands, aiming for high returns while managing risk effectively. Based on the historical data and forecast, SEI exhibits a generally upward trend, particularly noticeable from July 10, 2025, onwards. The RSI consistently remains above 50, indicating bullish momentum. The forecast for the next week predicts continued price increases, reaching $0.373. Considering the current price of $0.336 and the resistance level of $0.425, a long position is recommended. I suggest entering a long position at $0.33, setting a stop loss at $0.32 to protect against potential downturns, and aiming for a target price of $0.373. This strategy leverages the bullish trend and forecast, while the stop loss minimizes potential losses. To refine this strategy, we incorporate the Bollinger Bands. The price has been fluctuating within the bands, but nearing the upper band suggests a potential breakout. Given the RSI nearing overbought territory, above 70, a slightly more conservative approach is warranted. Therefore, I would adjust the target price to $0.36, slightly below the forecasted peak. The entry price remains at $0.33, and the stop loss is adjusted to $0.325 to provide a small buffer. This portfolio combines the trend-following momentum with the Bollinger Band's volatility indication and the RSI's overbought signal, resulting in a balanced and high-potential strategy. Based on the historical data and forecast, Pudgy Penguins exhibits a strong upward trend, particularly noticeable from July 10, 2025, onwards. The price has consistently broken through resistance levels, and the forecast for the next week indicates continued upward momentum. The RSI consistently above 70 suggests the asset is in an overbought condition, but the strong price action suggests this is justified by market sentiment. Considering the Bollinger Bands, the price is consistently trading above the upper band, indicating a strong bullish trend. Therefore, I recommend a long position strategy. Specifically, I propose entering a long position at $0.0275, aligning with the initial forecast price. Given the strong upward trend, a reasonable target price would be $0.0364, based on the forecast high. To manage risk, set a stop-loss order at $0.025, slightly below the recent price action and below the lower Bollinger Band. This strategy aims to capitalize on the ongoing bullish momentum while protecting against potential reversals. The potential profit is substantial, given the current trend and forecast, making this a high-return investment opportunity.